Welcome back to the Expat Investor Podcast. As always, my name's Tom Pewtress, Head of Proposition here at Skybound Wealth Management. And today I am in API Global's podcast studio. Joined with me today is Sam Crabtree. Sam, good to see you, my friend.
Yeah, good to be here.
Keeping well?
Yeah, good. Yourself?
Good, yeah, I am. Look, it's nice to be in a different studio, which is, you've got a nice little setup here for sure.
Fairly new.
Yeah, is
I
it?
think you could be our first guest.
No way.
Yeah,
we've
only used it. Yeah, we've used it today.
Okay.
Apart from that, yeah, welcome.
Very privileged to be here. Look, the topic for today is why you shouldn't invest in UK property, or should you? Okay.
Oh, I'm going to argue you should.
And obviously API Global. So just give us a bit of a rundown on who API Global are for a second, Sam.
Yeah, so API, we primarily work as a property conduit, a walkway to get UK investors or UK property out to an international audience.
Okay.
All right, we do that through yourself,
Yeah.
financial advisors, wealth advisories, investment arms, family offices, and we package property into, an asset just like you offer your other asset classes.
Makes sense. Look, I mean, a fairly hard-hitting topic today in terms of maybe looking at some of the negatives around UK property, or let me rephrase it, potentially some of the pitfalls and traps that people can run into if they're not working with somebody who knows what they're doing, I think is where I want to get to today.
Definitely.
I've seen for years and years and years, there's lots of house programs on TV, isn't there? You know, the buy and sellers, the flippers. There was programs on the BBC for years, and it was kind of go down the auction houses and buy a property and do it up and flip it and that type of thing.
Yeah.
In our world of dealing with expats and international investors and maybe people who are overseas from the UK today, is that same thought process applicable? Is it a quick flip opportunity? Does that exist in the realm of the UK today when you're buying the type of solutions that API bring to the market?
Well, firstly, yes, there is quick flip opportunities.
Okay.
As you said, the TV programs that may be more so aimed at buying a distressed asset, refurbing that property, and then looking to sell because you've gained that equity in the refurb.
Sure.
Okay, so you've bought below sell or below market price, and you're going to sell for above market price. Let's say our strategy is different.
Okay.
Or should I say the UK strategy in general should be different. It's a medium to long term play.
Okay.
It's coined as a low risk, high performing asset. We've seen through historical data, the rise of the market fueled by an undersupply. But essentially, what we push is the medium to long term investment cycle, the 10 to 20 years, the growth of that asset, and then they provide a passive income.
Makes sense. And again, so a bit of a different play really. I think from my point of view, I think if someone was trying to flip property, you'd probably want to be on the ground there doing it and overseeing that strategy. I think so. The relationship certainly we would have API and others across the board, but it's very much a turnkey solution from your aspect. From
our end, yeah, definitely. And we'll definitely go into that a little bit more.
Yeah.
But on TV programs, you would be familiar with location.
Yeah,
that was one, right?
Yeah.
But that is paramount to the investment. Okay, if we can find the right investment, i.e. in city centres, with a yield of 5-6% per se, that is going to fuel that investment for the longevity of the investment cycle. So location's key, market research is key in that. Yeah, I wouldn't be looking at flipping in the UK. Maybe more so in the Dubai market.
Yeah, maybe. If you want to take that risk on, for sure. Okay, so maybe obviously understanding now that the UK is more of a buy and hold strategy from our aspect. The complexities of being a cross-border individual is something that, as financial planners, we look to overcome a lot, and we work with people extensively on. Holding assets in different jurisdictions can sometimes be challenging. Sometimes people don't necessarily always understand their obligations when it comes to taxation. How at API do you mitigate that through kind of the turnkey solution, the all-in-one package? What should people be looking out for when they're buying a property, and is tax a risk for them if they're not looking at it properly?
I'd say it's a risk in the way that if it's not assessed, then it's going to probably be a stumbling block moving forwards. As soon as you invest in the UK, even as an overseas resident, you're subject to UK tax from that perspective. I mean, does Skybound have tax professionals?
We have third parties, so we have third parties.
Likewise with ourselves. So, I mean, if it's complex, if we're growing out a client's portfolio, which is the ultimate aim, we've done it with your clients, we do consult a tax professional in that regard, when things get a little bit deeper, a little bit more complex from an income perspective. But on surface level, for the purpose of this podcast, we can come up with tax efficient solutions through the setting up of the limited company.
Okay.
All right, so first you can buy in a personal name, you can buy in a limited company.
Yeah.
Okay, personal name is obviously Tom buys a property in the UK.
Yeah.
He or you as a UK passport holder, UK resident, have your £12,570 tax free.
Yeah.
Right, so that's one thing we'd analyse. What strategy are we taking? When that's used, we might look at then setting up the corporate structure, and then we can be slightly inventive. We can look at what offsets can we have from this business perspective. You are now subject to corporation tax as opposed to income tax. Those flights home, out to see your business. Okay, so we do have tax efficient solutions that we will run the client through make them aware of from the start.
Yeah, it makes sense. So I think it's like anything, right? I think when you're looking at something, you have to look at everything and both the pros and the cons. We kind of covered there. So buy, hold strategy, looking at medium to long-term investments, potentially one of the first hurdles to always overcome. And you're maybe not from the UK, right? And that may be also something you need to take into consideration and go through that journey for. And you mentioned it there about buying property through companies. The UK continues to change tax legislation and every day is different. And we may see more changes this October, right? With the new government, right? So we'll see what happens. But I think fundamentally, sometimes people will say to me that, but the tax, and it's almost like it's a problem or an issue area. Fundamentally, paying tax is always a good thing, in my opinion, because it means that you're making money. Yeah. Right.
Good way to look at it.
Yeah. Right. So if I'm paying taxes because it's a positive, it's not a negative. If I'm not paying taxes, then maybe I should worry because that means I'm not maybe making any money.
Exactly.
So in terms of making money, then. Would you say at API the majority of your solutions and product that you bring to the market is off plan, or is it ready built? Is it older stuff? Where in that market space do you sit?
We've got a few different strategies. I think now our largest focus is surrounding off plan.
Okay.
And that isn't just purely from our business dynamic in terms of that's what we want to push or that's an easier option for us. It's actually come on the back of, COVID, when we saw interest rates spike.
Sure.
Inflation was high.
Yeah.
So investors' confidence in the UK market never faltered, should we say. Their focus in terms of what they should be investing in has changed. Okay, so it's an investor dynamic that's led to them wanting to invest in off-plan.
Right.
Okay, have they been able to secure below market opportunities in that off-plan development? More than likely.
Yeah.
If you're working with the right developers, if you're buying in the right area, all areas that we study and we put forward.
Do you find that there is, some people have said to me over the past that the off-plan discount is a myth, or the opportunity for the growth on off-plan. Is it a myth or is it not a myth? Is there real value to getting ahead of the curve?
It is definitely a thing where if you do not invest with the right people, and under the right education, let's say, then you are probably going to lose out on capital value.
Yeah.
I mean, things in marketing campaigns and in brochures are coined to be attractive, right?
For sure,
So you could be sold before you've even gone in and looked at the market or what it's actually aiming to do. But again, working with the right people, the right developers, the right track record, you should be able to see where you're getting your value. Now, that being said, the only benefit of off-plan isn't the fact that you're buying below market value. The split payment plans are extremely attractive to a lot of investors, whether it's 10% or 20%. That allows a lot of people to cash flow successfully over the build, which again brings more people to the market, right? Because if I was going into a completed property today with all taxes and fees that you don't necessarily see on the surface, the capital you need is
quite significant, right?
Quite significantly more, should we say?
Yeah. And again, I think that off-plan strategy, certainly personally myself and having done it a number of times now, and definitely in the last couple of years, like you say, with interest rates, actually buying off-plan product today is a game changer, because I'm not having to obtain a mortgage today with potentially a higher interest rate than what's certainly going to be in the future. We've not quite seen it in the UK with the central bank reducing interest rates at maybe the speed of other countries at this moment in time, but it's coming.
Yeah.
We've already seen mortgage rates started to decrease in anticipation for that sort of stuff anyway. But you're not having to then pay a premium for a mortgage today, right? You're able to get into a project. And I think some of the stuff around, certainly off plan, and this is why we like working with API, certainly, because the solutions that you guys bring to the market are in areas that are set to be up and coming almost, and part of either regeneration projects or expansion projects, etc., where that project or that solution sits within a much bigger region of growth than forecasted going forwards, right? And buying at, there is no reward without an element of risk, right?
Exactly.
But you manage risk and we manage risk well in the fact that, okay, well, it's part of this council development or it's part of this bigger regeneration project, and there is a commitment there from multiple people, from multiple establishments or whatever it may be. That,
companies moving, infrastructure developments, where are universities, key indicators of growth.
Yeah.
We like to coin them growth corridors or pockets of value, but it is in essence what we're trying to find, the market research, the due diligence, again, I mean, that is heavily what we rely on, finding those key areas and getting those investors the best option or the best case in the best city. So I think that's where we've got to today, really, is the fact that we found the right projects, we work with the right developers, but we're in a position now where, like Skybound, for example, you've selected 3 of our properties. It's not a one size fits all, but this is investment advice, as opposed to going out to the street and finding end user real estate or shopping for the perfect home. We've cherry picked these developments based on ABC, and then they're pushed to the client based on what fundamentals or what you coin as the right path from a financial perspective.
For sure. And you talk about due diligence and risk, and one thing that I see a lot of, and I think sometimes, certainly from an investment point of view, we get clients coming into the office and through the channels to us, and people who want to talk about investments and returns. And over the years, I mean, crypto may be a little bit quieter than it certainly was a couple of years ago today, but there are other things that you typically see on social medias about guaranteed returns. Certainly in our world, there are. Nothing is guaranteed in my opinion, right? Like there is no free lunch ticket in this world, unfortunately. There is risk and reward in everything that we do. When you see these adverts on social, Sam, and it's like guaranteed returns, guaranteed rents, that type of stuff, if the due diligence isn't being done, or is that a red flag initially? Is that kind of like when someone's guaranteeing something, is that a red flag when you're looking at property?
I'd say so, wouldn't you?
Yeah. Well, I definitely do. I know it from the investment world. When someone says I can guarantee you something,
it's like, why would it be a guarantee?
I can secure you something. And there may be some insurances around the security of something, right? In delivering something to you. Exactly. But I can't guarantee anything in this world.
You'll explain fundamentally what is going to fuel that guarantee or that solution that you've offered them.
Why do people tell people that there is a guarantee?
I think primarily, like you've noted, it's appealing from a marketing perspective. People want to feel secure. In security, they get offered a guarantee. Okay. How many people go for a fixed return option? In various other assets, people like to know what they've got coming in, whether that's from a cash flow perspective as well. It does make sense. When it comes to property, it is slightly different. The guaranteed, or from experience, the guaranteed return will be, should I say, built into the property price.
Sure.
So as the investor, you're buying your guarantee in an inflated property, more than likely.
Right.
And then you get that return paid back through however means developer or tenant.
I see.
Makes sense. If we're to take a step back, and again, due diligence, market research, we've explained the investment case to the client. And that property is in an area that has huge demand from a tenant perspective, then that is what fuels your guaranteed return, or guaranteed return on a monthly basis. But that's the driver there, the undersupply of tenants in that area. And again, the same relates to the property value. You've got to just look around the edges, let's say.
Makes sense. Let's talk about tenants for a second and yield. You and I both, Sam, we live and work in Dubai, and we're very fortunate to do so, and it's sun 365 and maybe a bit too hot in the summers.
Yeah.
But Dubai has certainly been a yield market now for quite some time, and I think in the last couple of years, some people have experienced a good amount of growth in their assets that they may have purchased. Let's not forget that Dubai has not always been a growing market, and I've been here since 2015, and for 7 years I saw nothing but negative returns in the property market for a large part. But when you're looking at UK income and yields from property portfolios, what sort of yields are you seeing in what sort of regions, and why are people attracted to those yields? What sits behind those yields in the UK that delivers the security of that?
Leading the market at the moment would be Manchester.
Okay.
We're seeing yields touch 6%.
Okay.
And that's based on today's market, right? Not just the projections that we may see moving forwards from the forecast from Jones Lang LaSalle, Savills, Knight Frank, whoever it may be. London, Zone 1, obviously you're lower. You're probably 3 to 4%.
Okay.
Due to the property value, what you're purchasing as. But we wouldn't generally offer that as investment advice to our retail investor, let's say. But Birmingham, you're looking at probably 5%, 5.5%.
Okay.
Liverpool, similar. Okay, so if I'm talking yields, I'd always say between 5 to 6%.
Yeah.
Again, most people are comfortable with that. It's realistic. It's a
Exactly.
solid return.
Yeah.
As opposed
sensible
to
return.
It's sensible. Yeah. I mean, gone are the days of the 8-9%. Okay, or maybe not in Dubai in some cases, but definitely. And again, it's an alarm bell when you see those things from a brochure or a fact sheet perspective that you've got an 8 and 9% yield and coins with a guarantee as well. You should be slightly worried.
I think that leads me on to my next point. When you see those things, and does that sometimes end up in investors who are buying off plan overpaying? Do you see that when you've got, is there circumstances where clients can be marketed those dreams, sold those guarantees per se, and then they end up potentially overpaying for a product as a result of it if they've not done their due diligence around who they're working with? Is that?
Yeah, definitely.
Yeah.
Definitely. I think, again, down to research. If guys are looking at projects, with certain developers, then it is inflated.
Yeah. Yeah.
There's no doubt about that.
Yeah.
But again, look at who's offering you the product, the track record, ask for rental information. And when you touch on yields, it's very, we've got our own lettings and management division, Redstone. And, part of that end-to-end service that we touched on at the start is we let out the property, we source the tenant, we manage anything from a maintenance point of view. There's no calls at 2:00 in the morning that the boiler's broke, right? But the most important part of that lettings and management division is that we've now got a load of data that we can analyse, that we can share with clients. Yeah. So when we say the yields are 5 to 6%, we've got data that can prove that, and which is absolutely fundamental to giving people realistic and solid advice.
Makes sense.
As opposed to just coining, figures out of thin air and people maybe running away with a marketing perspective. Yeah. But that's why it's important when clients sit with myself and yourself and we can run through things from A to Z, like slowly, so everyone's walking away fully confident with the whole turnkey or the whole product.
Talk to me about that turnkey solution. We touched on it earlier today, and sometimes I think it's really important, certainly from my point of view, is managing client expectation and the journey of what life's going to look like when you're buying anything in life, right? Taking financial advice is buying, taking property advice is buying, investing is buying. Talk me through that process. So, I think sometimes we can forget how onerous it can sometimes be to get through the lawyers and what they require and why they require it and that type of stuff. So just talk me through step by step the process that someone would go through, the legal aspects of it, the ramifications of not doing stuff properly. Again, talk to me about, Sam, I want to try and unturn some of the issues people not potentially face, but potentially face if they're not working with someone who's pushing them in the right direction at all times. Things like silly things. what happens when a lawyer says, here's a contract and you've got 28 days to exchange?
Yeah.
Those types of things. So just talk me through that first process.
Yeah. So the end-to-end solution, the turnkey solution, however you want to coin it, has come about through the issues people have historically had with investing in property overseas.
Okay.
All right. So each point is aimed to cater that need.
Okay.
Right. So we've essentially got a 10-step process.
Okay.
I'll touch on the more relevant points
sure.
for the purpose of time, right? But fundamentally, the start is market research, due diligence. We've gone into that a fair amount.
Yeah.
You then move on to investment advice. That's you from a financial perspective, me from a property perspective. That trifecta with the client, yourself and myself allows them to get in the best-in-class solution.
Makes sense.
Dependent on their circumstances.
Yeah.
We then would move over to our mortgage department. Okay. Lending is fundamentally why, or using leverage is fundamentally why we look at property as well. Okay. Our return is based off the property value, not our down payment, which accelerates our growth or accelerates our return, right?
Yeah.
We then move over to the legal aspects. Okay. So when first of all, the legal side of things is from a third party perspective.
Yeah.
We bring on various solicitors for various projects so that they can go out and speak with the client and put across in layman's terms how the contract reads to them as an investor.
Okay.
They are fundamentally there for the client's investment.
Yeah.
If we talk about the due diligence or the marketing brochures or the guaranteed rents or the yields,
sure,
you could be sold an absolute pipe dream.
Yeah.
But when that lawyer comes and gets involved, it's their job to bring that down to earth.
Right.
To get rid of that adrenaline or that excitement and say, this is what the contract reads. Okay, your 7% guaranteed rent is only applicable for 2 years and there's a breakout clause.
Okay.
Things like that.
Yeah.
So they're primarily there for your protection, to sit or to stand alone from Skybound and API.
Yeah.
We then move over to lettings and management. Okay. The lettings management team are there to allow for the client from an overseas perspective, or even our UK clients, to receive a passive income.
Makes sense.
Okay, just like they plug into any other asset class with you.
Yeah.
Essentially stocks they receive, but they're a very easy solution, aren't they? The client puts forward their money, they get their return, they can have a conversation about markets. Do we need to pull? They're very liquid.
Yeah.
Property's illiquid, but it's liquid from a point of view that you are getting a rental return.
Sure.
But we're providing that on a monthly basis, hands off. You don't have to collect the rent. You don't have to deal with certain issues that may rise.
Yeah.
And you've always got the capital appreciation ticking in the background. Now, the last part of the end-to-end solution is that with an investment mindset, it's not a one property sale and move forward.
Sure.
We call it the portfolio optimization. There's 3 key bits or 3 key elements that we've notified as the drivers of growing a portfolio. You've got your exit strategy.
Yeah.
Again, that's coined like we have done with your clients.
Yeah.
What do they want? Do they need a return? Are they retiring? Is this to use leverage and release equity, which is the second point?
Yeah.
And the third point is releasing finance. Okay. So when we're investing in those right areas, when we've got that growth, that equity sitting in the property, we're looking to pull that out if the client requires that and invest in something else.
Do it again. Yeah. When it comes to mortgages, so I'm conscious of time and it's been good so far, but again, what should clients be doing to make sure they can get finance? Because again, some of the time, again, I'll coin it from our side and where I've seen slips, trips and falls, but I've seen people take off plan property, not explore and not take advice on all elements.
Yeah.
Get 2 years down the road and all of a sudden I
can't.
I can't get any finance. Okay. So what should people be doing through their journey?
So again, due diligence from our end or the client's end, we'll advise them to get a decision in principle.
Okay.
We'll pass them over to our mortgage team.
Okay.
What that will essentially do is allow them to show that they're able to get a mortgage in today's environment.
Right.
Now that's not an indicator of future environments.
Yeah,
right?
of course.
Say
Things change.
Say we go into COVID again.
Sure.
Or some other economic crisis.
Yeah.
Then they will not get that mortgage on that premise, right?
Yeah.
But it gives them a good indication of where they are now and that they can get one.
Yeah.
Now, in all of the contracts and in the properties that we offer, we've got an assignability clause.
Okay.
If it's not the client's fault that they can't proceed, okay, things happen that are out of people's control. It's not fair to. And firstly, we're not in the business, or developers we work with aren't in the business to take people's down payment.
Make sure.
Nobody. That's not sustainable.
Yeah.
So with that assignability clause, it then allows us to reassign the contract to a new buyer. Okay. So that's there for the client's protection.
Yeah.
We've had several of those go on at the back end of the interest spikes and whatnot with various clients, maybe in Africa or certain parts of the world that haven't been able to get a mortgage for whatever reason. So we've worked with our partners to reassign those contracts and to resell those properties.
And does it, when you're looking at financing, does where you are living and where you are from sometimes impact that process of gaining?
Definitely.
Okay. And why is that? Is that just, I guess that's a risk point of view from the bank?
Yeah, it's a risk point of view from the lenders.
Yeah.
Okay, what risk are they willing to take on for loaning you that money?
Yeah.
That's understandable, right?
Makes
sense.
But
let's be clear about it. They are very flexible. We've had cases where, we wouldn't have necessarily thought that a client could get lending. We put in special applications to lenders, and based on income and various factors, savings, they've been able to get a mortgage offer.
Yeah.
Okay, so there
just
are
about exploring the options, I guess.
It's about exploring the options and getting us or our mortgage team to put them on the table and run through them. That's all.
And I guess from that point of view, that means that if you're out there listening today and you've thought that buying property is a good idea or not, or never thought about it, just because you're not from the UK originally, or you don't live in the UK, or you don't want to go to the UK, that doesn't discount you from buying UK property, right?
Absolutely not.
And why would you say, Sam, UK property is such a strong asset when you compare it to either other markets or any other financial instrument as a whole?
The global attraction, the lure from all corners comes from the fact that it's a mature market, it's stable. No better time to look at that than the last few years as well, where doom and gloom on every headline, every newspaper. Realistically, what happened? Nothing. No real downturn. We're now in the growth stage again. It was more stagnant than anything. That's given people more security, more confidence that in future times of crisis, we're going to work through that. And no investment comes without any risk.
Of course.
There's always going to be turbulent ups and downs. The UK as an asset is one that just slowly seems to churn away. And that's why, we work in Africa, Asia, Europe, Middle East. There's that attraction.
Yeah, makes sense. But strong asset class.
But and that being said, and what's quite funny is a large amount of these people that invest with us will never see that property. Yeah. They may never even go to the UK. They don't fancy the grey skies. But what we're doing, what our job is, or my job, let's say, is to remove that emotion from the client. Yeah. To focus on the fundamentals, the cash flow. If the numbers make sense, the investment makes sense. And
just make it a numbers game.
Yeah, it is. And pitch this just like it is any other asset.
Do you find people do get emotionally charged over it when you go through the process with them?
Yeah, definitely.
And how do you remove it for them? When you're talking to clients, how are you trying to take some of that emotion out of that decision?
Focusing on the macros that drive the investment, focusing on the conversations around the numbers. Obviously, we need the trust, because those conversations are irrelevant if somebody doesn't trust you. But generally that comes from our partners.
Of course.
All the wealth advisors we work with globally, we're dealing with their clients. So the trust elements are already there. And then it's down to us to really tailor that conversation into getting it away from where the TV's going to go in the lounge.
Makes sense.
I know if I've done my job right,
that
we've agreed on the investment before we've agreed on the unit.
Understood.
Because we're not going to live in that apartment. The client probably won't see that apartment. If they do, that's up to them. But we know that from a tenant perspective, from a growth perspective, through the conversation we've had, it's safe or it's solid from that grounded perspective.
Perfect. Well, look, Sam, I really appreciate your time. Thanks for coming on the podcast today. As always, this was the Expat Investor Podcast here with Sam Crabtree today. It's been great having you along. Thanks for listening.